Okay, I'd like to welcome everyone to the Hurley Investments Financial Services Commentary. Being Wednesday morning, I did not get this done Tuesday night. This is Wednesday morning, but we'll get this posted out to everyone. I'm out traveling in the Houston area, so I am just a bit busy this week. I thought I'd at least get this recorded for you guys because I've heard some very interesting comments. And when you want to say, what do you want to talk about today and why, I want to go over our current stock market movements. As I have been speaking with people, a lot of people said, which I think is kind of funny, the number one question is, are we going to pull back this time? And I guess as I would sit here and talk with you guys, I'd say probably not. Go ahead and look at our trend. If we go ahead and pull up the Dow Jones Industrial Average, which is vaguely or mostly unimportant, would be one of my best comments there. It's only 30 stocks, doesn't give a whole or a good overall outlook on the economy, but the Dow is definitely overbought, still heading higher. And today being Wednesday morning, we're going to head higher even more. As I looked at this month, and if you were to ask me, and I'm going to go ahead and I'm going to highlight it, we started the month overbought. So if you look at what my predictions are, right? I'm going to go ahead and squeeze down here, find out where my predictions are. I was predicting maybe 0.5%, and then on the third, I changed it to 2%. But you know what? That's not really accurate. I think I actually had it at 1%. Because, yes, I have been waiting for, today being the 18th, so for 17 days, I've been waiting for a pullback off the overbought RSI line. Again, what you sometimes will see is when get me a color here. When you see a deviation away from the 50-day simple moving average, and I want to tell you it runs like 10%, is when you get these pullbacks on down. Way up, deviation above, pullback on down. And again, they're usually going to touch or retest the 50-day simple moving average. So we're getting a standard deviation of, I'm going to go ahead and get my calculator. The market currently is trading at, on the Dow, 22,997. The 50-day is at 22,997 minus 22,218 or 6. It's one of those. A spread of 781. So maybe it's only 5%. So actually, we still have room to run up there. We still have about 1,100 points. Would be your 5-day. We've got a deviation right now of 781 points. There's about 320 points of upward movement to still be had till we run a full 5% deviation off of the 50-day simple moving average. And all I'm trying to say in very technical terms there, the wider this spread gets between the 50-day and the actual price of the Dow, the more likely it is to see people really start to take some profits. And when you say people, it's usually institutional money. With that said, though, if you were to look at this chart, I'm going to squeeze down to the SPX. I think that's a better validation of our market. Taking a look at the SPX, 2559 minus 2490, that's only a 69 point spread between where it's actually trading and that blue line, which is a 50-day simple moving average. So we still have room to run even though we're overbought. But when a lot of people ask me, hey, what's happening? I can go ahead and I can look right here on the Dow, and is it time to pull back? Not necessarily, as we are testing the 23,000 mark on the Dow Jones Industrial Average. Of course it was going to bounce around for a couple days. What do you think typically happens when we get to these big round numbers? And this is, if you don't know, this is why sometimes people talk about the law of round numbers. Usually at round numbers, institutions, funds and so forth have set up a bunch of a bunch of sell orders. And remember, these guys can't trade daily. They have to go send their block orders through the SEC, get approval. Of course, they always do get approval, so it's kind of a useless step. But literally, they send their orders in advance. I don't know for sure if it's days or weeks before, but they've said, hey, up around 23,000, we've got some funds. And off they go. They send these orders in to sell, where they're going to take a profit if the market gets up to this price. They also have buy orders down at support. Hey, if it comes back down to, you know, the 50-day simple moving average, which in this case is at 22,216, so there's probably a bunch of buy orders set up at 22,250 or 22,300. In fact, it looks like that little dip there would tell you, hey, at 22,300, there are probably some buy orders set up. And when, okay, and just said, where's that dip? Right here. So all support and resistances are these buy orders that are stacked up by institutions at certain levels. So hey, we've got some stacked up at 22,300, it looks like. It's where it found some support. We probably had quite a few sell orders stacked up at that 23,000, yet I think we have run so quickly, meaning 22,000 in September, and 58 days later, we're gaining 1,000 points on the Dow. Previously, it looks like, well, there it is, 21, sometime in March, and it took us this long to capture 22,000. And then I guess you would go from August till now if you wanted to, but I'm going to go ahead and I'm going to use right there. So, you know, 2.5 months to capture that run up, which means obviously big businesses hadn't spent enough time, big businesses, big institutions have not spent enough time out there placing those block orders to sell, to reevaluate their models. In fact, if anything, the market is running away. You've probably heard that term before. The market is running away from itself. It's running away from the traders. I would dare say you probably have a lot of institutions that are chasing the market today. Chasing it for buy orders, chasing it for sell orders. They're a little bit behind the curve, and obviously they're chasing this market just like they tell us not to or not to be in. If I can show you a stock that for me I think is quite unbelievable, and I'm doing the best I can not to chase it because there's a gentleman I that would like to be back in it. I'm going to go to Baidu. It has by far been my biggest winner, but this is just absolutely ridiculous. So we have had earnings, obviously, right in this time frame, and I believe we had our earnings here, but I think it was right about here. No, it was. I don't know exactly where I am, but we've had a run from 174 to 273. And during that time period, I spent $8.80 for earnings, and that would be the last earnings that they had, which is sometime in July. And then obviously I just recently put some protection on, and I had to roll it because not only did it not stay at 260, it went up to 273. So short answer, I have spent about $14. It's going to be about 20 when it's all said and done, $22 on protection for the last 100-point run up. Unbelievable. Kevin, why is Baidu running up so well? Well, there was a time it was artificially held back. Great earnings, and it wasn't given the love or the movement up from the movement up that you'd expect with the good earnings. I guess you can kind of relate that right now, most recently to Bank of America. Killed it top bottom line and actually went down on its earnings. I think it takes a couple days for people, and those people can be institutional, it can be retail traders. It just takes a couple days to digest, to hear the analysts' stupid comments. Boy, I'm sorry. If you are an analyst, I must say analysts are by far the most aggravating individuals that I've ever seen. I mean, all they do is they guess. They're hardly ever right. But these companies have to meet analysts' expectations. And Baidu was not given the benefit of the doubt, artificially held down, and boy, did it explode higher. It really took off to the upside. We have earnings coming up, estimated on the 25th or 26th. Let's take a look for Baidu. It looks like on the 26th, they're not confirmed, the 26th of October. So next week will be a heavy earnings week for my clientele. But the Chinese are going through their new regime every 5 year. Hey, we're going to look at our economy and tell you what we're going to be doing. And it's funny because Michael, as we talk daily, he says, you know those communists just said, hey, no stocks are going down while we're going through our vote and while we go through our meeting. And maybe Baidu is artificially being propped up. They are the Chinese Google. But if they are artificially being propped up, I've made the comment, and Michael and I argue back and forth, that if they are being artificially propped up, it's only because they were artificially held back for so long on such good earnings. It's kind of one of those that comes around, goes around scenarios. So, short answer is Baidu is making my year this year. I'm going to take it. It's a good win for Hurley Investments, and again, it comes back down to being in a stock that you believe in and struggling through the down times. That's what collar trading does. It gives me the ability to hold on to some stocks as they're traveling down, even with great earnings, and doing so with those long puts to make up some of that downward movement. while a lot of people are selling out saying, oh, I can't take it, I'm just sitting around being excited and cheering for it to go down just as much as I'm cheering for it to go up, because if it goes down, I'm going to make up some good money to the downside. So with that said, let's get on back to erase this. Let's get on back to our paper. So with that said, don't know if we're going to pull back. It looks like we're going to have a strong earnings season. And financials have for the most part shown that. If you look at Citi, great financials, they found some weakness in profit margin. Goldman Sachs, JP Morgan, Bank of America, financials look significantly stronger. Yes, there are some people that are picking into their actual numbers and what they say, what they look like, but for the most part, I think banks or financials are looking pretty strong going into earnings. So I found an article, and people have asked me here, and I've said it for the last couple of weeks. Technology and financials are where I definitely want to be next year, especially with any tax breaks for companies, and those tax breaks will also involve some reform of the Dodd-Frank. If you reform from the Dodd-Frank, the bank should do really, really good. Well, look what's happening this week. On Monday, the Empire numbers came in at 30.2 versus the estimated 21. So manufacturing in New York was really off to the races. Import numbers, can't spell. Import numbers came in at 0.3 versus an estimated 0.3. Export, we're getting our goods out there, a 1.0 versus an estimated 0.7. You kind of expect that with Christmas coming up. Capacity utilization came in at 76.0 versus an estimated 76.1. Industrial production, though, still haven't learned how to spell. Industrial production came in at a 0.3 versus an estimated 0.2. A little bit better than expected. I don't have the long-term Treasury numbers for Treasury budget. We also had net long-term tick flows, but what seemed to be moving our market really comes back down to earnings. Goldman Sachs, Morgan Stanley, IBM even hit their numbers for the first time in forever. Kind of shocking. Wednesday, we have Abbott Technology, U.S. Bancorp, which this morning is making a good push for our futures. Kinder Morgan, eBay, Valmont, AXPI, or AXP is American Express, AA, Alcoa, so technically today, the 18th, starts the earnings season. Thursday, KeyCorp, Verizon, Tacos, that's Taco Bell, I'm pretty sure, PayPal, WD-40, we have some. Turner Surgical, I've been following for years. Friday, Honeywell, General Electric, Procter & Gamble, Schlumberger. Economic reports start to slow down going into this week. Housing starts and building permits today are going to be important. Existing home sales on Friday will move our markets one way or the other. If you're to ask me where we're going, I'm going to tell you, hey, we're going higher. I think our market's going to end higher this week, and it's going to be on the backs of earnings. Kevin, we're overbought on both the Dow and the S&P, and basically the the NASDAQ. I think we'll go a bit longer. I think earnings will push. It'll take a big day from some big hitters, some FANG hitters, to give us a pullback. Look to see us go higher into the Christmas season, and maybe even go higher with some type of tax reformation towards the end of the year. Economic reports, again, pretty simple. I didn't see any international. Why did I not? Make sure I just didn't forget. I didn't see any international reports that I have in here. And that is a little unusual because normally I would see some type of international. A labor market report today. Japan, fixed trade, China. Boy, there's a lot of China there. Fixed asset investment, GDP, industrial production, retail sales. Those are all huge. I should have had those in there. So we should have had China, GDP. You can't miss that one. Industrial production, retail sales. So here I thought, boy, there just was nothing, but it's not that there was nothing, I just missed it. Housing price index on Sunday usually won't, well, they have talked about the bubble there. So the China housing price index will most likely set our futures for Monday. Huge bubble. In fact, their bubble is 4 times the big as our 2008 bubble when it comes to loans and so forth for housing. I am getting ready for trading, just looking at earnings. I will probably run some long put protection out of the money. Understand the difference between the IMF and the World Bank. I highlighted that down below. The IMF was tasked with overseeing a system of fixed interest rate linking global currencies. The main goal for the World Bank was to give financial assistance to countries. I don't know if you guys knew the difference, so I put in a pretty good article so you could learn or read about the difference between these two companies. Pretty interesting. Bank of America put out a little piece that talks about the financials and healthcare. Since then, though, Trump has said he's not paying healthcare, so healthcare is probably not the best thing to do. And I just found the 5 foolproof ways to build wealth. I like it. Use your time wisely. Spend less than you earn. Again, these are all pretty common ideas. Progressively raise your bar. Use every advantage, tax advantaged. Don't try too hard. Or the short answer should be there. Don't stress yourself out. It definitely is not easy to do trading in the stock market. It's very emotional, but I found these to be pretty helpful in helping individuals think about the stock market. So, guys, have a great week. It should be a pretty easy week. It should be a week that you can see markets go higher, and I'll get this posted for you here today. Have a great week. Talk to you next week. Bye-bye.